My name is Charlene. How are you? Welcome to XUCPA webinar. Today we will share with you something very important, that is how to defer payroll taxes. Everybody wants to know about that. Joining me is Avery. He is the tax accountant here at XQCPA. Avery, why don't you start by introducing yourself?
So yes, my name is Avery. I am the tax accountant for XUCPA. I've been with the firm for a number of years now. What we do here is that we serve business owners such as yourself who are watching this webinar today. And we're going to go ahead and address a number of questions that you guys will have regarding deferring payroll taxes.
Okay, so the first question that people usually ask us these days is, what kind of payroll tax deposits, what kind of employment taxes that business owners are allowed to defer. So, Avery, do you want to explain to everybody?
So the CARES Act allows business owners to defer the employer's portion of Social Security taxes. So what does that mean? So every time you remit payroll, there are a number of taxes that you send to the IRS. There's the federal income taxes, and there's the FICA taxes. And within the FICA taxes, there's Social Security and Medicare. So the CARES Act is specifically talking about the Social Security portion. So this portion, employers can defer. However, the caveat is that business owners that have received the PPP loan, which I know a number of you guys have already applied, you actually cannot defer the deposit of that tax once you receive the decision from whoever your lender is that the loan is forgiven. So the next question that you business owners will have is, when can you defer the deposit of the Social Security tax without incurring penalties?
Okay. What is great is that business owners can actually defer payroll taxes, the 6.2%, anytime between March the 27th to December 31st, 2020. So the time period of March 27th to December 31st is what we call the payroll tax deferral period. Any payroll that you process between this time period, you can defer the 6.2%. All right. And then we have business owners who actually ask the question of, do I have to file special election? Do I need to have a special form? The answer is no, you don't need to do that. So what you have to pay attention to is the 941 second quarter, right? So most business owners are going to be deferring, their payroll taxes starting from April, which is the second quarter. So if you pay attention to a revised 941 for second quarter, it will allow you to provide an option of outstanding balance of the 6.2%. All right. If you already plan to start, or you have already started deferring the taxes starting March 27, that is going to impact your first quarter 941. Unfortunately, I don't think the form is out today. But do check back the irs.gov, or you can also check back our website. We will share with you as soon as the form becomes available. So the next question that business owners ask is that by deferring these 6.2%, if we don't pay these taxes, then do we need to pay penalties? Avery, can you share your answer?
Yes. So all business owners, they actually can defer this 6.2%. However, once again, like if you have received the PPP, you actually cannot defer this 6.2% that is due on or after the date that the loan is forgiven. So the next question that you will have is that, so can a business owner that has applied or received the PPP loan that's not yet forgiven, can they actually defer the deposit of the 6.2% without incurring penalties?
Okay, so this is a very relevant question, right? So if a business owner applied for PPP and they're wondering, well, I don't have enough cash because I have not received PPP. I mean, a lot of people have already applied, in sometime in March or beginning of April, and you have not seen the money. your bank has not approved the loan, right? So can you defer? The answer is yes. If you have already applied for PPP loan and you have not received it, and the amount, even if you have received PPP and your loan has not been forgiven, for the time period, you can still defer. In fact, we want to remind everybody for PPP, there's a covered period. And the covered period is February 15 to June 30th. So that would be the 8-week period that you can ask for forgiveness. But remember, for the payroll deferral period, they're talking about March 27 all the way to December 31st. So, hopefully that is very clear to most business owners. As long as, both don't happen together, right? The quarter that you get forgiven is the quarter that you defer. Then the law is, the IRS rules and regulations are saying that you cannot defer, your payroll deposits in a quarter that your PPP loan has been approved and have been forgiven. Next question is, as all of you know, with CARES Act, there's just so many incentives. There's the PPP, the EIDL, you can defer your payroll taxes, there's paid leave, there's employee retention, there's just so many credits. And a lot of people are asking, if we take all this credit, can we still defer payroll taxes? So there's actually two types of credits, business owners. There's the paid leave credits. Okay, I'm going to repeat. Paid leave credits, and there's a retention credit here. They are both different. All right. The paid leave credits is for employers to get a credit if they have workers or family of those workers who are affected by coronavirus. Then you get the paid leave credits. In terms of the employee retention credits, there's actually two conditions that an employer will have to meet in order to get the employee retention credit. So, Avery, can you share a little bit more information about employee retention credit?
Okay, so the reason for this employee retention credit is to kind of incentivize business owners such as yourself to keep your employees on your payroll. So the credit is actually 50% up to $10,000 in wages paid by a business owner whose business is fully or partially suspended because of COVID-19, or whose gross receipts declined by more than 50%. So there would be two criteria. The first one, as mentioned, is that your business is actually or fully or partially suspended due by these government orders because of COVID-19.
Yeah, so for example, if you have if you're in a state, there's a stay-at-home order, and then your business is not essential business, so you're not allowed to even open doors, then you would qualify, correct?
Correct. The second so it's either one or the other. The second one is that your business's gross receipts are actually below 50% of the comparable quarter in 2019. So this means that your business has to start beginning in 2019 to qualify for this second test. Otherwise, it would only be based off your first test.
Okay, so we also want to share with you a little bit of how this is applicable and how do you get reimbursed. All right, if you're a business owner, you can be immediately reimbursed for the credit by reducing the amount of payroll taxes that you have to withhold from your employee wages that you are required to deposit with the Treasury. So, for example, if you are going to pay somebody, say $100, and the net check is $70, and you have the FIT and FICA withholding for the $30, so what you're saying is that you can utilize the form 7200. Yeah, is that correct?
Yes, 7200.
Form 7200. It's a new form, so I'm still trying to learn the numbers. So you can use 7200 to calculate the credit and also to submit, and you can receive immediate reimbursement once because you don't have to pay the difference to the IRS, right? So when you are processing payroll as an employer, usually you have to remit the employee portion of taxes and also the employer portion. But in this case, they are saying that employer portion you get to defer it. The employee portion you can apply as a credit. So Avery, if I'm a business owner and I ask the question of on the employer portion, if I want to defer it, how do I defer it? How much time do I have to repay? So can you share with business owners a little bit about that?
Yes, so there's actually 2 dates in terms of when you actually have to remit these taxes. So the first 50% you have all the way to December 31st of next year, which is 2021. And then this remaining 50% you have all the way to the end of 2022, so meaning December 31st.
So the next part of our presentation, I know that a lot of business owners today, you are here because you really want to know a little bit more about the employee retention credit. So we want to give you very specific information about how you apply. So employee retention credit is a credit that you can claim between the time period of March 12th to January 1st. So essentially March 12th to December 31st of this year, end of this year, right? When is a business considered suspended? Because if you remember, we talked earlier about 2 conditions. One is that significant drop in revenue. And then the second part is that, your operation has to be either partially, or fully suspended. So the definition of partially or fully suspended, according to, IRS rules is that if there's a stay-at-home order, if the state governor actually issues that. And then the next slide, one we want to talk about is the definition of significant decline in gross receipts, right? So there's a very specific, definition or description, about that. So here, I'll give you an example. In quarter 1, right? Say, last year in 2019, your gross revenue, say for example, is 10,000. In order to qualify, like one of the conditions would be, like this quarter, Q1 of 2020, let's say your gross revenue dropped to 4,500. So it's, your gross revenue in the current quarter is actually 50% less. So that would be that would qualify for a significant decline in gross receipts. Okay. Next, we want to talk about how to determine maximum credit. Okay, so the credit, first we had to talk about eligible employer and also qualified wages. So qualified wages for each employee is $10,000. Now the credit is up to 50%. So in a scenario, say you run a business and you pay one person 10,000, right, for the quarter, your credit is actually 5,000. All right. So in a scenario where you pay the same person 12,000, your credit is still 5,000. So 50% of each employee. Under the scenario where you pay 2 people 12,000, then obviously your credit is going to be $10,000. All right. So the next slide, we want to go to the definition of what is actually qualified wages. Avery, you want to take over?
Yes. So qualified wages, what that is
it actually applies. So essentially, it's the wages that you pay to your employees, which also includes like any health benefits that are also included. So there's a specific area in terms of wages. In terms of qualified wages, this definition changes when you have 100 or less. So when it's 100 or less, then all the wages that you apply to employees, of course, up to 10K is considered qualified wages. In the scenario where you have a company that you average more than 100, then it's only the wages paid to people that are essentially staying at home that are considered as qualified wages. So the next question we have is going to be, what kind of employment taxes is applicable?
Okay, I think there was probably maybe a little bit of like, slight error in the slide before. So I just want to be very clear, is 6.2% of employer portion of Social Security taxes. Okay, so 6.2% on the employer portion. All right, the next slide, we are going to explain to you, this is actually a refundable credit, and this credit is fully refundable. So we're going to give you examples of what does that mean, all right? We have one example here that, this employer have one employee, and in the quarter, we pay this person 10,000. Therefore, what is the credit? The credit is 5,000. And in the same quarter, this employer had to pay $8,000 of payroll taxes, which is equivalent to 6.2% of Social Security. So forget about the math portion. I'm just gonna explain the concept to you. So say if you have to remit $8,000 of payroll taxes, all right, because you have qualified wages of 10,000, and because of that you have $5,000 of credit. So what does that mean? That means instead of rather than paying 8,000, you now have 5,000 credit. So what is due? 8 minus 5, so it's 3. So which means for this scenario, in this, for this person, $3,000 is due, right? So this person does not have a refundable credit because we utilized 5K already. So that 3K, as long as he or she remits it by the deposit date, then we're good. And then we have another example, which is actually more applicable to people who are planning to get the credits or cash from IRS. Avery, you want to explain?
Okay, so we have this example is that, let's say you have qualified wages of 20K. So meaning we'll just say 2 employees. In this situation, of course, 50% 20K, you get 10K credit. And same scenario, just like the previous example, there's going to be 8K of the 6.2% of the Social Security taxes. So what this means is so far you have 10K credit, you have the 8K of the Social Security taxes. So therefore, the result is that 10 minus 8, you get 2K of advanced credit, which of course will need to be reported on the Form 7200 if you want to claim that in advance. So the next question we have is that, can you claim for this credit if you receive the PPP loan? And of course, we have covered that. The answer would be no. So these are all the questions that we have regarding the payroll taxes, deferring it, and the advanced payroll credit.